and welcome. It's Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets, as always, with an eye toward helping prepare you, not just for next week. We want to take your eye out even further so that you can outperform the markets. That's really what my work is all about. So let's go ahead and get started. I'll share with you our agenda. As usual, we are going to go ahead and take a look at the current markets. Is that backdrop bullish? Is it ideal to put new money to work or not? Also, I'm going to share with you the waiting for a pullback for entry. And this is something that actually it took me a while to really get into. I get excited. I see these stocks, and many times I was getting in a little too early. So I'll share with you what I learned. We're going to take a look at some stocks as examples. Also, gapping up on earnings. We do still have some stragglers that are reporting, particularly in that retail space. I'm going to share with you what your next steps should be based on historical precedent. Of course, this is information that you can use as we get into earnings season again in about 3 weeks or so. Also, I'm going to share with you not the top 100, but I did review Robinhood's top 100 most popular stocks, and several of them did pop out as looking rather compelling. So we'll get into that. Also, stocks on the verge of a turnaround. And for those of you that followed, I did the your daily five. I talked about this, and then other outlets as well. This concept that a number of areas in the markets are reversing their downtrends. So we'll take a look at some names in that area as well. But as usual, we want to take a look at some of the more compelling, moving headline news last week. Economic data, of course. We did see consumer credit. Consumers are opening their wallet, slight gains, but it was the third monthly gain. And this most recent month, it was led by auto lending, lots of people buying new cars. And job openings did hit a record high. So while we are seeing unemployment numbers drop, a number of jobs are remaining open. So a little bit of conflicting information there. Consumer prices, that's that CPI, it did come out yesterday. Consumer prices again in May soared. Inflation now at a 13-year high. The good news is the markets were not overreactive, so that is quite positive. Consumer sentiment, it did rebound in June. So consumers are also a lot more optimistic now as we enter into these summer months. Next week's up, May retail sales, producer price index, that's more inflation data, and then also housing related data is all going to be reported next week. So let's go ahead and take a look at the markets. This is a daily chart of the S&P 500 index. Again, continued bumpiness, back and fill, pretty tight range for the most part. But the markets, I will tell you, as despite pockets of strength that we're going to be talking about today, there is still just an overhang as far as investors really coming to terms with the economic data that's continuing to, of course, come our way, and how to sort through that because of the unprecedented period in the global economy that we're currently in. But at the end of the day, we did inch out to a new high on the S&P 500. And this was important for those of you that follow my show each week. You'll know we were on the lookout for that new high simply because that prior high was acting as resistance until we did now retain and close at a high. We can see the RSI and the stochastics both up here in positive territory and heading north. So backdrop looks quite good. From here, of course, we do want to drill down behind the curtain, if you will, take a look at those sectors, and we want to see areas that are either just beginning to outperform or have been outperforming. So I've gone ahead with this 2-month candle glance daily chart view, added an RSI, sorted it in descending. We want to see the strength up here in the forefront. And then, of course, make sure you're not overweighted in some of these weaker areas. So here we are. We can see that REIT stocks are just continuing to power to new highs. And this is an area I am very sad that I missed. I've been on top of REITs certainly in the past and have been able to benefit, but my eye was on other areas, for lack of a better way to put it. But certainly a very, very confirmed uptrend. It's not just about higher yields here. This is all about reopening apartment-related REITs now with employment firming up. Their outlook is constructive, even office buildings and so forth. So lots of strength there. Let's take a look as we move along. Now, this is an area that I have been able to embrace, and subscribers to my MEM Edge report have been able to take advantage of this nice advance here in a number of energy stocks. And as we move on, I'll share with you the precise nature and one of the reasons that energy is on the outperforming upper tier here. A lot of it, again, that reopening, the economy, and then the expected increase in usage of oil. Commercial services, this is XLC, is the ticker symbol. And I will tell you there are a couple of areas in here that are picking up. I'm not going to get too into it here. I might mention one name, but my MEM Edge report will delve in further as to the dynamics taking place here. But I did want to take a minute and share with you that technology is actually continuing its downtrend reversal. It was among the top 3 as far as performers, and this is really constructive. This is what I talked about earlier as far as inflation fears seemingly receding. This period here was during a period when interest rates had increased and inflation fears did, in fact, really blow up. This is that CPI, the report back here, and you can see that tech wobbled before its recent downtrend reversal. So very good news there. And of course, we would be remiss to not point out healthcare, because healthcare took a tumble here last week. One of the major pharmas downgraded their outlook and it spread. But this week, nice downtrend reversal. So we're going to talk about where that strength is emanating from within healthcare. You'll want to be aware of that. Another recovery area, now this is something that is just beginning to come into its own. This is XLU, Utility Index. This is another recovery play. Utility, actually, if we go back, it did have this huge advance over here, all about the reuse of energy, certainly utilities within, as people began going back to offices and so forth. So a very orderly and anticipated pullback. We can see that XLU, the RSI, got super high, MACD here. But this is really interesting. It's something I'm going to be digging into more over the weekend. I'll share my findings with subscribers, but a lot of really alternative energy, some interesting plays in utilities that I'll be taking a look at. So here in this lower quartile, these are areas that are beginning to deteriorate, for lack of a better word. Industrials. Now, I'll tell you, industrials overall year to date have not been really big performers, but you can see as an overall group, they are deteriorating. As we get into this next area I'm going to be sharing with you, you'll be able to see precisely why, where the weakness is. Likewise with financials, we did see a pretty significant downdraft here. Financials were the poorest or worst performers for the week, down about 2.5%. But let's go ahead and move on, because I want to share with you beyond those sectors some sub-industry groupings that will shed even more light as far as where the strength is in the market, where the action is, if you will. So I have a number of sub-industry groupings within technology, oil, transports, and so forth. And that same concept, 2-month daily view, RSI descending. I'm going to go ahead and update that. And here we are up in the forefront. We talked about healthcare coming back to life, up 2% for the week, all about. There were other areas as well, but primarily biotech. Biotech stocks up 6% on the week. For those of you, if you have not been following closely, Biogen did have their Alzheimer drug FDA approved, and it really woke the group up, for lack of a better word. There is a lot of vibrancy coming back into the space. A little bit of controversy. 3 of the 11 FDA panelists have resigned because, and you can certainly read more about it, but that biotech decision was not a universal one. So there we are. Biotech's up there in the forefront. Another super outperformer here. Software stocks back into play. And again, a confirmation that inflation fears appear to be receding. Software up about 4%. And this is an area near and dear to my heart. Lots of winning stocks over the years. And by winning, I mean major outperformers have come from this software space. And we talked about energy doing well, all about crude oil up here at that $72 range. Really quite bullish for these oil producing stocks. Now, of course, we want to take a look at some more deteriorating or weaker areas, again, to make sure that you are aware, and perhaps you may want to lighten up. So here we are with regional banking. KRE is the ticker, and it was down 3% for the week. So weakness there. I'm going to go right back and share with you one of the reasons, and this is the yield on the 10-year. We can see a significant deterioration, certainly relative to its recent back and fill period. Longer term 10-year interest rates are continuing to decline, and that is not so good for bank stocks. I'm going to take a brief break here, and when we get back, we're going to take a look at those Robinhood stocks, talk about pullbacks, and a whole lot more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I'm going to begin this segment by talking about playing the pullback, waiting, biding your time. I talked about in the past, I would get overly excited and jump into these stocks, watch them pull back, eventually go back to new highs, but no need to sit through that pullback. Here's an example of a stock from my MEM Edge report. EW, Edwards Life Science, that in my report here, there were 2 other names as well that I talked about being on our watch list, but not quite ripe. And here's why. So EW did come out with very strong earnings. It caused this very nice uptick here. And the old me might have jumped on with an anticipation of higher highs. But in fact, here's where you can really get insight and know that your timeliness would not be particularly good here. So let's take a look at some of those characteristics on EW back at the end of April. We can see first up, the RSI got very oversold very naturally. This is a significant advance from 85 up to 98. And we certainly, you're not going to want to chase stocks if they're up here in this RSI above 70, unless you're super short term. For my work, I'm going to be on the lookout for at least a 2-week advance all the way out to 6 months or more. So that is not going to be a positive signal for me. Also, take a look at the MACD, another momentum indicator moving average, convergence, divergence, and we can see back here at this same time the MACD was up here at its height. Really, if you go back historically, there's not a much higher that the MACD can go. This is, again, that momentum. You want to catch it early, the early turn coming up above zero. So there it sat on our watch list for over 2 weeks, almost 3 weeks, just biding our time. We had other stocks that were working. So when this particular stock did begin to reverse its downtrend. It pulled back very orderly to this upward trending 50-day simple moving average. And so what we can see is that the stock does begin to reverse this downtrend. So here are the characteristics you're going to want to be on the prowl for to let you know that this downtrend reversal has legs. First up, take a look at the volume. In fact, I should probably be just taking a minute here and marking this up a little. So here we are with that downtrend reversal. The stock post what appears to be a bottom, starts trending upward, and you can see upon this that we are getting nice high volume characteristics. That's going to give me confidence. Also, we have this RSI turning and then turning positive and in line with the MACD, this black line up through the red. So the stock was added to our MEM Edge report, and you can see that it did have another secondary pullback, which is absolutely fine. This was a significant advance here, but the RSI did remain positive, as did the MACD. So a nice advance here. So that is that concept. As far as rather than chasing a stock, you do want to be on the prowl and take a look for pullbacks. Let's take a look at a couple of other stocks and to give more in the way of insight. I talked about gaps up on earnings. We're going to get more into this, but here's an example with Ulta. The company posted 460% year-over-year earnings growth, and the stock pulled back to its 21-day simple moving average in this case, and appears to be trying to regain that upside momentum. I would point out the RSI throughout that pullback period stayed positive, as did the MACD. So certainly one for your radar screen. Let's take a look at another stock, TGH. And I did actually this is a stock that is also earnings related, reached a new high in price, but that same concept. RSI up here above that 70, your MACD really at its height. It only went a little bit higher back here during this February period. So on the prowl for that pullback and downtrend reversal. So I think we're good as far as sharing insights there. From here, let's go ahead and talk about stocks that gap up on earnings. And so as usual, I'm going to start with an example. This is another one from my MEM Edge reports. Those subscribers that are watching, hello. And we are going to take a look at DKS, which was on our suggested holdings list prior to this big gap up here on earnings. So we can see that huge volume as the stock advanced. I believe it was up about 14% on the day. And let's take a look, because again, there are other stocks that did this have a gap up this week. So you're going to want to know what after the gap up to look out for as far as the stock retaining its bullishness. So in the case of DKX, it's been really a bit of a go nowhere environment, but the stock has pulled back very orderly to this upward trending 10-day simple moving average. This is actually a textbook case of what you want to see occur after this big gap up. It really needs to digest for a stock of this size. This was a sizable move. The RSI remaining positive throughout this period. And also of note is the fact that a lot of retail stocks really pulled back. DKS held up well. However, it is still in a confirmed uptrend. Ideally, we would want to see this MACD pull back a little more, but that uptrend's very firmly in place. So from here, let's go ahead and take a look at a couple of names this week that reported. This is Restoration, or actually the new name is RH. And we can see this big gap up. This was yesterday. I believe it was up about 17%. Very good quarterly numbers, 285% year over year growth. So the markets responded with this gap up. So let's take a look at the subsequent price action. I'm going to add an additional moving average onto this screen that may add a little bit in the way of insight. Yep. So I added that 5-day. So what's going to happen ideally here is that the stock does not give up that gap up, that it is able to close at a level above that. So we can see that the stock very well may pull back or have a back and fill period here until that moving average catches up. One thing though, as far as candlestick charting, we're not quite there, but it does have the resemblance of an outside engulfing candlestick where the price actually has a period below the prior's low and above the prior high. So we'll see how this one plays out next week, but keep that on your radar, because at some point we're going to look for that simple moving average to catch up, and then the stock can resume its upside. Here's another one, Signet Jewelers, SIG. Gap up, not quite as significant, but huge volume. The nice thing here, a couple of nice things, is today's follow through, and actually that is a pretty significant 7.5% gain, but it's also on very significant volume. When we come down, take a look at this MACD, the advance as far as that black line up through the red, we're still quite early, so there is still further upside potential. The RSI just approaching into that overbought position. It is certainly extended by all accounts. So looks like it is poised to go higher, but certainly with some pullback is what you will want to see. And then one last name as far as an example, and then we can move on because we certainly have lots that we want to cover here. This is Zumiez, another earnings related gap up, and the stock has pulled back. I don't always put that 5-day there, but nice pullback to that 10-day simple moving average, your green line. I did mention this as a occurrence after these gaps up. As long as it finds support at that upward trending 10-day, this could present itself as an ideal buying opportunity. RSI is positive. So that is a look at gaps up and what you can anticipate as far as moving beyond. So let's go ahead and move on from here. A little bit of fun, if you will. Robinhood, I actually opened an account there I think last week or 2 weeks ago, just for this kind of thing, so that I can stay on top of what is the most popular in that app and on a given day, most active. But I did zero in on that 100 most popular list of stocks among Robinhood users. And as you know, it does skew to a younger age. And really, it was every name, kind of a pop culture list, really, but doesn't mean it wasn't very viable. There were names on there, but certainly one of the popular names there is Amazon. And from what I could see on the list, it was Amazon, Starbucks, just really products that perhaps these users of Robinhood utilize. And that is not a bad way to invest, particularly if it's something that you use and everyone else that uses it. Oftentimes there's going to be growth. So first up is Amazon, and we can see that Amazon had a nice downtrend reversal this week of those stocks, the FANG stocks. It was the top performer, nice volume characteristics as it reversed this recent downtrend. The only for me, as far as looking at this stock, we can see a lot of historical head fakes, for lack of a better word, where it ramps up and fizzles, but net, it is looking quite constructive. So that was at the top of that Robinhood 100 list. Let's take a look at another stock that is in that communication services, internet related, and this is Snapchat. So Snapchat is a company that does a lot in the way of photos and video. Their user base is among the 13 to 24-year-olds, and among that age group, 59% use Snap in some form. And the company actually has some very nice growth prospects with estimates up for both this year and next on the revenue side. So I'm pointing this out because SNAP is just now poised to break out of this nice 2-month base, which would be quite constructive. Let's go ahead and move on, take a look at another Robinhood 100 stock. And this is a potential downtrend reversal. The company is IDEX, Ideanomics, and they are in fact a blockchain provider with fintech, among fintechs. And we can see it's up here potentially forming the right side of a base. Your outside momentum indicators are positive, so could be interesting there. One other name I did want to share with you among those popular names, this is Sirius, SIRI, and they are one of the top as far as audit. They do provide a lot of shows musically and otherwise. And this move this week is on news that they teamed up with a company, CRNC, which also looks constructive. They're an automotive software company. So Sirius, you can now talk to your Sirius while in your car. They talked about it being conversational and switch around as far as what you look at. One last name that is very much among the Robinhood, but also has a high short interest here is FUBO. This is a live streaming company, also potentially reversing its downtrend. They stream sports, entertainment, and so forth. They did launch an app with LG Electronics that got this stock moving this week. But also bear in mind that it is very heavily shorted. It does have a high short interest, which of course can be beneficial when good news is out there. So I do have a few more minutes here. I'm just going to share with you some turnaround stocks. I'm going to begin by looking at stocks that are a little bit further on in their downtrend reversals. And what we're seeing is a number of stocks that were big winners at the beginning of the year and fell out of bed, but they are just beginning to show signs of life. This is Levi Strauss, LEVI. We can see the RSI just now poised to turn positive. I'm going to want to see that black signal line up through the red, eventually turn up here above that net neutral zero. Most important, we want the stock to break back above these simple moving averages on volume would be better. Let's look at another stock that's just setting up potentially nicely. Tapestry, TPR. This is the old Coach company as far as purses, wallets, and briefcases. Very popular in China. Same dynamics. RSI poised to turn positive, just now poised to have that uptrend there. We would want to see a break back above this simple moving average to confirm. So for those of you that have not already, go ahead and use that link below. Trial my MEM Edge report for 4 weeks, $7. You will not be sorry. We're going to talk more about rotation in this weekend's report and a lot more. And if you like what you've seen, go ahead and hit that like button. Everyone, have a great weekend, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.